Good afternoon, everyone, and welcome back. This is Daily Trading Analysis with a quick market update for today, March 10th. Big day today. Non-farm payrolls came higher than expected, 311 instead of the 205, way lower than the previous one, but the previous one was a big spike on payrolls. So still payrolls are increasing way higher than we are expecting, and this is not good. However, unemployment rate came hotter than expected, 3.6% versus the 3.4% that were the consensus and the previous one. Average hourly earnings year over year increased a little bit from 4.4% to 4.6%. We were expecting, though, 4.7%, so a little bit lower than expected, and month over month decreased. Overall, mixed sentiment, non-farm payrolls higher than expected, unemployment higher than expected, this is good, this is bad, and mixed, average hourly, I don't know. Looks like the media is saying that, well, solid growth, more than expected. I mean, I'm repeating myself here. Don't follow the media, just build your own bias, your own strategies, and your own analysis, and maybe you will be successful, because the media sometimes manipulate the information, and we know that what that means. So what the markets did. So basically, we started pushing higher with a bottoming tail of the unemployment rate, and then at the open we sold off a little bit, and I was super surprised about the following. Look at the bonds market. Look at this. Interest rates are deep in the red. The dollar is minus 0.84. The 2-year yield is minus 3. Look at this pullback. Look at this. This is huge. The 10-year is minus 4%. And the September yield, interest rates, futures, look at this. This is not something that you usually see. So on bonds market are pricing in a big decrease in interest rates. We pulled back from 5.6 almost to 5.3 right now. And that means something. Bonds market are one of the best traders that trade risk. And if you see this, and at the same time the stock market is selling off, I bought the dip at this white line, 11,870. I took some positions and I add in this zone. Let me show you. I add for the break of this, and I'm just holding as we are already at high of days and looking to retest this zone that was the initial reaction. I don't know, I have some ideas why we initially sold off. I think the financial sector regarding, let me show you. Let's do a quick break here. Bitcoin failed due to the Silicon Valley Bank and also Silvergate Capital that are entering into collapse, are collapsing. So basically, yesterday's sell-off that was honestly unexpected. If we check yesterday's price action into the close, we started seeing that both banks were liquidating their positions and liquidating their debt. I mean, this was a super hard thing to see. Actually, financials ended up the day with, look at this, this was minus 4%. So I think a lot of the sentiment today at open was due to that. But honestly, no, I think you should pay attention to other markets, how other markets are reacting. I'm going to, give me 10 seconds. I'm going to take one of two contracts off. So my average is now 12,000. And honestly, I'm going flat. Hold on, 10 seconds. I'm going flat. Okay. So that's 12,000, 1,200 on the day, 1,200 on the day. That's a really good day for me. And I think, okay, explaining the bonds market. So once you see this, I think a lot of people took the opportunity to build positions in order for this kind of move. So if you see this was what I was expecting, this kind of move, this trend. We initially sold off, I think, due to the bad sentiment yesterday, but I mean, look at this. This was a clear indication that there was some more bullish sentiment that we initially expected. And I was super surprised here. I tried to be patient and I took some down here of these levels yesterday's. Look at this. This is the topping tail that we got on the daily. It was marked here, and also this pivot here are 11,870. So I left this level here because this bottoming tail was indicating bullish signals, and I was really glad. I'm really glad that I took this position for long today, because it was super sell-off that had no sense for me. Look at this. We were at RSI 18, super sold off, super oversold. And I built my position, and look at this. We are actually in the green. Everything is in the green. Tesla is leading the market today. Apple is lagging a little bit. But overall, Nasdaq, I think it was initial mixed sentiment, but right now is quite bullish. So let me reinforce again the fact that yields, bonds market are one of the best things to interpret this kind of news, and how they react is actually really interesting today. So let's recap. Big pullback on the September yields interest rates for this year. And if we check the FOMC FedWatch tool, you can see that yesterday it was 70%, 68% for 50 basis points, and right now it's 50-50. And the probabilities are showing something really interesting. Look at this. At November this year, we are pricing in an interest rate cut. So it was hikes until next year, but right now are 98, 91 on December. So again, some analysts, bonds market are pricing in a little bit of interest rate cut probabilities at the end of the year. And this change, along with the big pullback on the bonds market, helped me decide on buying today weakness. And I bought down here. It took the first pullback. Also, it was not perfect, no near perfect, but I accumulated for the break of this. And if not, I was on profit. I was just really thinking about my risk, but I was quite sure that we were going at least to test this high of day for today. Here we are in the 30-minute chart. This red is this close candles from the pre-market, big push, and I think we are rejecting. It's meant to pull back. I think we are going to pull back, not big, but we'll have to see how we react on this second pullback now that people are really watching and seeing some strength. So once we are in the green, maybe more pullbacks will happen and more people will jump in, but we'll have to be patient because today it's mixed sentiment. I think data is not as bad as people are thinking, and I'm really surprised we sold off that much, but we are again quite good. So let's see the daily. The daily is putting again, look at this, again, this bottoming tail. Really interesting price action. More things. Energy 1.21%. Crude oil. Crude oil is pushing 1.70%. You have to, don't forget about crude oil because this is impacting futures, CPI's data, and we have to be careful here. If crude oil starts ripping and breaking market structure change towards 83, that might be an issue. But for now, XLY, consumer discretionary 1.20%, XLY versus XLP ratio in the green for consumer discretionary. So I think a lot of people started to think maybe yields are not going to be that high. 5.5 was the terminal rate that now pulled back a bit. Maybe the pressure from the Fed is not going to be this high. So unemployment rate going higher, I think, boost sentiment in terms of less terminal rates for interest rates. So let's see what happens and how we end up today. But for sure, I wanted to explain to you all why I wanted to go long and my underlying, my background on the decision, and that is bonds market and the analyst change in terms of probabilities for the interest rates. And I think that's all. It's Friday. I'm going to log in. I already logged in profits earlier, as I mentioned, and I'm going to enjoy the weekend and be prepared for next week. Because next week we have some interesting data that is coming. Next week we have core inflation rate and inflation rate on March the 14th. So as you can see, it's for the next interest rates decision is 12 days, and next week we are going to get the CPI data on Tuesday. That is going to be really interesting. Wednesday, retail sales and PPI. Again, another big hitter. Thursday, housing market data and jobless claims. And Friday, consumer sentiment. But for sure, be prepared for Tuesday and Wednesday because this is going to be huge. Take your profits, everyone. Try to don't ruin your day, your week, on the last day of the week, on Friday today, and be smart and wait for next week because it's going to provide big opportunities. So as always, thank you for your time. If you found this video useful, please remember to click the like button and subscribe to the channel to receive notifications when I upload new videos. Remember that I upload new videos every single day. Every day for market forecast, market updates, and market recap. You can find really useful information from my side in this channel. So please support the channel, subscribe, and I appreciate your time as always. But remember, the trading day is not over yet. Discipline and risk management are key for your success. Stay safe, everyone. Have a nice weekend and see you on Monday.